Making work pay credit. If you remember on your tax return, the last 2 years there was a $400, $800 if you were married. There was that tax credit down at the bottom. Do you remember that or seen that? You're not going to have that on your return this year. This 2% decrease in your Social Security was a replacement to that. So you got $3 a paycheck, or whatever it was, $20 a paycheck instead of a $400 credit. I personally like the credit better because you don't notice or do anything different, as I don't, with the $20 change in the paycheck, plus the $400 lump sum. But that's what they decided to do. So you will not see that making work pay credit. It's gone for this 2011 tax year. So those are some individual items. Some business tax tips. Section 179. You know, the Congress and the IRS has done a lot with the tax law to try to help the economy. Last, the GO zone, and even before then and currently. Last year, $500,000, but it's reducing to 139. I mean, a lot of small businesses don't spend that much, but still, some people, especially if a lot of machinery equipment, that makes an impact for you. The bonus depreciation was 100% last year, reduced down to 50% in 2012. Some other things, the employee-related computer tax reduced from 6.2 down to 6, starting last July. Talk about the 2% increase. There's a couple of credits out there. If you hired anybody starting last March, or if you hired a veteran, you potentially have a credit there. So just think about those who may have hired last year, or if you hired anybody to see if they qualify for a potential credit on your tax return. What's that? As a W-4 employee. As a W-4 employee, not an independent contractor. Some individual tax tips. Gift tax, if you are in a situation where you want to transfer some of your assets or even some of your income producing assets to your family or children, you can do up to $13,000 per year, $26,000 if you're married. This is a good potential deduction for business owners, small business owners. If you have children, you can hire them as an employee. Give them something to do. Take out the trash, help with the filing, help with the mail. You can pay them as much as you want, but if you pay them up to the standard deduction, you don't have to pay Social Security and Medicare, and they won't owe anything because you still get the standard deduction even if you claim them as a dependent. That child gets on their own return the standard deduction of $5,800. So you can earn up to $5,800 or pay them up to $5,800. Well, a lot of our clients do is take that money and put it into a college tuition savings plan for them. And Stephen can help you with that as well if you don't have it set up. So this is a great deduction if you have some children. They got to be at least old enough to be able to do something worthwhile. And up until they're 18, we're not required to do Social Security and Medicare. Now, you can pay them more than $5,800 and they still have to pay tax at the lower tax bracket. But if you want to not pay tax at all, you can do up to $5,800. Talked about the American Opportunity Tax Credit, things that qualify, not only tuition, but also fees, books, supplies. This is a good way to deduct a computer because a lot of most classes require to go online, right? These days, get assignments, submit assignments, and things like that in college these days. So to me, a computer is a necessary expense for kids in school these days.
So conceivably, I can pay my $1 or $2 exercise and be riding my horse.
Absolutely.
Cool.
There you go. There's also some home energy credits. The ones that around the last couple of years, they changed it a little bit, but if you still did some home improvement, energy efficient improvements on your home, then there's some potential credits there. A few last things. The capital gain rates are still favorable, at least through the end of this year. We're not sure what's going to happen in election year. And who knows what's going to happen, but it's still favorable. Work with your investment advisor and with us to see the best way to capitalize on those capital gains rates. Another thing that we recommend is to take advantage of retirement plans with your companies, if you're an employee or business owner, and also any cafeteria plans. Get anything out pre-tax to help reduce your taxes. If you have a cafeteria plan or a dependent care reimbursement plan or a medical reimbursement plan at your offices or your companies, take advantage of those, especially if they match, if your employers match in your retirement 401k or something like that. At least contribute enough to max out that matching portion. That's an instant return on your investment. And take advantage of those.
What about those of us who are self-employed and have like healthcare savings accounts? And can you, even if you don't, like I've got it, my family's got a $10,000 deductible. If we don't, and we say we fully fund the healthcare savings account attached to that, can we refund it year in, year, even though we don't exhaust those funds?
It can continue to grow. It's not a use it or lose it like some of the medical reimbursement plans through a cafeteria. Health savings plan, you can put in as much as you want, as long as you take it out for medical eventually. But it's gross tax free, and you can keep funding it.
So if you've got the cash to fully fund that account, do you recommend doing it every year to the maximum
Yeah.
amount? Okay.
That and retirement plans and